Hey everybody, this is your December 2022 Ottawa Real Estate Market update. If you've seen our past updates, you know that I like to start off with my trusty cheat sheet. I'll read you through the stats for the month of November, and then I will tell you what it all means to me. At the end of this video, I'm also gonna leave you with two predictions, one bold prediction for next year and one not so bold prediction. So here we go. Here are the stats. November 2022, we saw a total of 846 properties sold in Ottawa. 658 of those were freehold properties and 188 of those were condo. 846 total sales is an extremely low number of sales for the month of November. In fact, it's the fewest sales we've seen in November in Ottawa since 2012. Now, to put that into context, this is what I looked like in 2012. Yeah, it's kind of a long story, and I wish I could tell you that I was young and dumb, but I think I was like freaking 30 years old back then, so just dumb. As far as average sale price goes, the average sale price of a freehold home last month was $680,000, give or take. It's actually about the same average freehold sale price as we had last month. And if we zoom out, what we see is that we haven't really seen a significant drop in freehold prices since about August. So we're really starting to see prices stabilize there. Average sale price of a condo was $415K. That's about 8% lower than last month. However, if we zoom out again, we also see that condo prices have more or less been in that same range, $415 to $450K on average, since about the month of July. There's a little bit more variability in condos because we sell fewer of them, so months can spike up and down. But again, zooming out, what we're seeing is that prices are really starting to stabilize across both freehold and condo properties. We're sitting on about 4 months of inventory right now. We're in a balanced market. Inventory levels have also been pretty stable over the course of the last few months, since about July. Last but not least, we've seen about 27% more rental listings this year than we have in the past. So that does it with my cheat sheet. Andrew Duck. There you go. Should really pick that up. This is my listing after all. Forgot to put my shoes on today, so these are my socks. So what does this all mean? Well, for starters, the fact that prices are pretty flat over the course of the last few months for both freehold and condos, and the fact that inventory levels have stayed fairly stable as well, tells me that we are now finally starting to see predictability in the market. If you're a seller, you have a better idea of what the price of your home will sell for. It's not shifting wildly from one week to the next. And if you're a buyer, you can also get a pretty good idea of what you can expect to pay for a home. Comparables actually have meaning again. For a while, they didn't because prices were constantly shifting from one week to the next. So it's a much more predictable market. It's a much more enjoyable pace for buyers. And if you're a seller, you're gonna have to be a little bit more patient than you would have had to be a few months ago. Now let's talk about the rental inventory. Like I said, there's 27% more rental properties on MLS this year than there were last year. I think there's two main reasons for that. The first reason is because you have a lot of people who bought homes in 2021 and 2022 who've had a change in their life situation and who, rather than selling the property at a big loss, are choosing to rent them out instead. Makes sense. Everybody thinks that these rate hikes are going to be fairly temporary and that the sort of medium term things will get better and that prices will go up again. So if you are in that position and you're looking at an option of either selling now at a loss or holding on for 1, 2, maybe 3 years, renting the property out and then selling, I would advise you to take option B if it's there for you. The second reason though that we're seeing a lot more rental inventory on MLS, to me, is because investors are really starting to see opportunities in this market. I can tell you personally that I have a lot of investor clients who I hadn't heard from in a while, who all of a sudden over the course of the last 2 months have started to call me. They want to go out, they want to start shopping. Again, prices have stabilized. The prediction is that interest rates are going to come down in the sort of next 12 to 18 months. And so to me, this is a great time. If you've got cash on the sideline, great time to invest. And the numbers, the stats are bearing that out. Again, a lot more rental inventory because in my opinion, a lot of investors are getting into the market. They're buying properties. They're not looking at flips. They're not looking at major renos. They're looking at buying quality properties that they can rent out to quality tenants and just watch their money grow. So that's how I interpret the stats. Now, I told you I would leave you with two predictions before the end of this video. Prediction number one. So bold prediction, not so bold prediction. Not so bold prediction. I think December is going to be a really slow month. December is always a slow month in Ottawa real estate. Given the trend that we've seen, sales are down about 40% compared to last year over the course of the last few months. December was really hot last year because the market was really ramping up. I think this year is going to be the opposite. I think there's very little urgency for buyers right now, and I think December is going to be an extremely slow month. I would even go as far as to tell you that if you have a property on the market that you're living in and you don't want to be bothered during the holidays, you're probably not taking a big risk taking it off the market and letting it breathe for a while. And even if you do leave it on the market, chances are you're not going to get a ton of showings over the holidays. That's prediction number one. Here's my bold prediction. My bold prediction is that I think the ingredients are in place for us to see an uptick in sales and in activity and in prices at the beginning of 2023. And here's why. The messaging that we've been getting from mortgage brokers, financial people, the banks, pretty much everyone, is that interest rates may continue to rise in the short term, but that by the end of 2023, beginning of 2024, they should start coming back down. And when they do, we also expect housing prices to increase. There's also been in the news that Canada is expecting to welcome about 500,000 newcomers to the country over the course of the next year. So again, that's going to put further strain on the limited real estate supply that we already have in this country. So a lot of smart buyers, I think, are going to look at the landscape and they're going to say, okay, prices have been stable. They're quite low. Mortgage rates aren't great, but everyone says they're coming down in 12 to 18 months. So if I buy now, I benefit from the lower price. And then when the rates go down, in 12 to 18 months, I can just refinance. So I can get a lower price, and when rates come down, I can benefit from the lower rate, and prices should also go up when rates come down, so I'm also gonna benefit from the equity. So it's a win-win-win. I think that a lot of smart buyers are going to come to that conclusion and are going to look to hit the market early next year before rates start coming down. So essentially, they're going to look to be buying low. I personally think that's a good strategy. Now, there's a lot of things that could change. We could keep getting bludgeoned with interest rate hikes. At the end of the day, you're never gonna time the market perfectly. I do strongly believe, though, that if you're buying with a 5-year outlook, I think now may be one of the better periods to buy that we've seen in a long time, provided you can make the payments, you can withstand the interest rate. So that's my semi-bold prediction. I think we may see a real nice little uptick at the beginning of 2023 in sales, sale prices. And we all know, we've seen in the last 2 years, it doesn't take a whole lot to get that ball rolling, and sometimes it can just snowball into a red hot seller's market. So time will tell whether or not that comes true. That does it for the December 2022 Ottawa Real Estate Market update. I hope you enjoyed it. I'd love to know what you think of the real estate market. I'd love to know what you think of my stocks. I'd love to know what you think, period. Leave me a comment. I make an effort to respond to all of them. Next time I see you for one of these updates, it's going to be 2023. So let me take this opportunity to thank you for watching and to wish you and your family a very happy, warm, safe holiday season. Whatever you celebrate, I hope you celebrate it well, and I hope you're happy. I look forward to seeing you in 2023.